not investment advice. Hello, everyone. Welcome to episode 59 of Going Live with Good Soil. Another Tuesday. And yeah, Matt, you and I were just touching base. You're talking to Brett Winton on a Twitter thread about Ethereum staking and such, and pretty interesting stuff. I mean, not really. We don't go into detail on that too much on our channel, but maybe we should try to have him on our channel for a recorded interview to talk about that, but also just like stocks and equities and some of the picks that his team likes and why they like them. Would be curious to just pick his brain a bit. I'm sure we could talk on Tesla about other things, but it would be cool to get him on our channel sometime. What do you think?
Yeah, you and Dave had him on Dave's channel. I think, what was it, like a year ago, maybe?
Yeah, year and a half ago when my solar roof was being installed. I remember. Yeah,
it was a great conversation. I mean, Brett is just like a wealth of knowledge, and the stuff that they're doing at ARK is really interesting. So yeah, I think it's very easy to kind of like beat up on ARK given their performance right now and like some of their moves lately. But I think the core of what they do is still research, and they've got some interesting opinions. Value analyst is in here saying Tesla will triple in 2022. That was like his mantra earlier in the year. Now that we're recovering a bit, he's back on the boat. So
what's up?
Not investment advice, but
no, none of this is investment advice. Yeah.
But yeah, anyway, that'd be great to have a conversation. If we could get Brett on here sometime.
Yeah, maybe I'll reach out to him. I think I have his email or something. I'll try to reach out to him at some point when I'm back from Hawaii. I'm going to Hawaii for 10 days tomorrow. So yeah, the macro market, I mean, are you still concerned about inflation, Matt? What are your thoughts about? I mean, inflation was like the big thing everyone's been talking about for months. Every little indicator, everything, inflation, Fed. What's the Fed going to do about inflation? What are interest rates going to be 6 months from now or a year from now? That's been everything about the macro market, I think. What are your thoughts? What are your latest thoughts?
Yeah, I mean, we've been talking about this for a while now, that a lot of the leading indicators to our mind seem to be pointing towards a higher likelihood of inflation, kind of capping out and potentially even reversing. But then like month after month, we've been wrong because the inflation reports have just been, quite high. This finally, when we got the July numbers, it was essentially flat month over month. And if you looked at the core, it was a very modest month over month increase. But everybody like in the media and even a lot of like commentators on Twitter were saying, oh, well, it's still like, 8.9% year over year. So we shouldn't be that happy. But in my mind, like the year over year comparison does not matter.
I agree.
Because we already have that information. Like we already knew that, anything in 2021 compared to anything in 2022 is going to be like a very high inflation number. So what really matters is where we go from here. So I've not seen enough people focusing on that in my mind. But what are your thoughts on kind of inflation, where we're likely to go from here?
Exactly the same. And I did like a poll on Twitter just to try to gauge what the rest of the, Tesla Twitterverse investors are thinking, at least, which is mostly who follows me. So I don't really have a random sampling polling method, unfortunately. But I feel like it's a good sentiment of just overall investors, just sort of a neutral topic for everyone, is the interest rates and inflation, maybe. So I did a poll and it was close to half. It was like over a third of the respondents, not half, I don't think, but over a third thought that the year over year number was more important than the month over month. And that surprised me. And I see it all over the media headlines and the business, media news, it's like, markets rallying, even though inflation's still 8.6 annual, 8.6%. But the month over month is what's so important here. The 0.3% CPI reading month over month. And next month, it's already projected by Cleveland Fed to be 0.2%. Like this month over month rate to me is like by far 10 times more important signal than the annualized rate. The annualized rate could be like a 2-year, 5-year annualized rate for all it matters. Like 1 year is like, given the crazy swings of events going on with the COVID supply. I think listening to Cathie Wood, I was thinking about it, and I think listening to Cathie Wood's thesis so carefully, even though we're not sure it's right or not, but just like understanding her thesis of supply chain shocks rippling through the economy and causing a deflationary correction and so forth. And then the Ukraine crisis helps me understand that like this was an inflationary shock, not like inflation to stay. It was just like a set of events that all happened to like sort of cripple the global economy in such a way temporarily, and that could last 6 months, a year, 2 years, whatever. But it's sort of unwinding now, is my view, and that unwinding of that crippling of supply chain shocks and all that is kind of happening. And now inflation's coming back down fast, and so like you said, Matt, what if it becomes deflationary? What if month over month it's negative 0.1 or negative 0.3% or something one of these next few months? That's not out of the realm of possibility, but no one seems to think that's even possible.
Yeah, and kind of the interesting thing is, in the background of this, like, Fed raising rates so aggressively, and we had the negative GDP print, obviously, potential recession or potentially something worse. But if you look at a lot of the indicators, they're actually, like, the labor market seems relatively strong, which the market was taking as like bad news, that, oh, that's gonna, kind of create continual inflationary pressure because consumers are continuing to buy, and the debt levels for the consumer are going up. And I think it's certainly possible that really is bad news if that does continue to contribute to inflation. But I think it could also paint a backdrop for this sort of soft landing target that people have spoken about, that I think most people think is unlikely now. But if you actually have this situation where inflation cools, mostly because of commodity prices and some of the like inventories and stuff that Kathy Wood talks about, in a backdrop where the economy is actually relatively strong, and you just had kind of this like 2-quarter blip where GDP retracted a bit. I mean, that could be really, really good news for the stock market if earnings growth is strong for companies, and so that's a scenario that I think we're starting to give increasing weight to. But what do you think about? I think last week, did you say 70% probability, something like that?
I felt like 60%, 60 or 70%. Yeah, that's where I'm at. Like right now, I think 60 to 70% chance of soft landing, meaning like the overall stock market, interprets interest rates not to go up as high, and so therefore people are buying into equities, and the equities market rallies into the end of the year or the next couple months. So I think that's likely. It's not definite, but I just think it's likely, and it's not. It doesn't seem like many people think it's as likely as I do. And in fact, every day, like, the news headlines are like, the market is still rallying despite terrible bearish news about the economy. It's like fear mongering. It's just.
Yeah,
I don't know. No one's a macro market expert, but I think the market overcorrected on the downside like it always does, and now it's kind of coming back to normalcy. And maybe once it gets a few more data points about inflation, that will be very telling about where we are going, I think, for the macro market, because people will say, oh, the Fed's not going to raise rates 75 basis points again, or 50, maybe even not 50 basis points if the month over month is 0.2% again, or something like that. So we'll see. But we've forced to become, students of the macro market in the last 12 months, and we spent a lot of time looking at this. And I'm still not very uncertain. I feel like the best macro market thinkers out there always preface their predictions by saying, I could be wrong, but, or like, it could go this way too, but this, they're always doing that because they know, they're seasoned. They know that it's so uncertain trying to predict the macro market. Anyone who's predicting the macro market with any level of certainty, to me, that's a red flag. Like, don't listen to that person, like, that person doesn't know what they're talking about. So anyway, we'll move, we've talked about the macro market. We'll continue to talk about it at the beginning of every episode, and then we move into like Tesla and other stocks we cover in Q&A. So why don't we go on to Tesla is next on the list here, or is there anything else you want to touch on macro before we go to Tesla?
Yeah, I mean, there was one data point that we saw, or at least that I saw from last week, which was there's a huge amount of short positions in the S&P 500 futures market, which Peru Saxena tweeted that. I retweeted it, and it's basically, it's the highest level that we've seen since like the COVID, or the original COVID crash, like in 20. And we all kind of remember how that panned out. I mean, there was so much fear, there was so much shorting going on in the market, and then it was this massive V-shaped recovery. There's a lot of reasons why this time is different than that. I mean, probably the biggest one is that we've got QT rather than QE, and interest rates aren't quite as low, obviously. But I do think it's like apt to call that rocket fuel. Now, of course, the shorts could be right, and maybe this rally we've seen is just like a like a bear market rally that, just gets washed away and we hit new lows in the coming months. But there's certainly a potential that, you could see some short squeezes. And I think we've seen that in a couple names. I mean, we'll get into, not Lemonade this week, but like Roblox had a huge turnaround after their earnings. There were a couple other companies, Invite recently, which had like a 260% day. I think it was last week.
Bed Bath Beyond today. Bed Bath Beyond today is up like 60% on short squeeze. Yeah. Halted a couple times.
So I think we've got this dynamic where they're like kind of there's some fuel, primed on a lot of names, and even just kind of like within broader, S&P futures, like that chart indicated that, if things move the right way, you could see a rather violent rally, at least as a potential outcome. So I don't know. I'm very curious to see how it pans out, but it seems like the odds are moving slightly in the favor of a soft landing.
Yeah. We will know sooner. Time will tell. So, yeah, moving on to Tesla. Elon is apparently, I think he probably really is done selling this time. If there is any more selling he has to do, it would be a very trivial amount. But I think I don't think that's going to happen. I think he's done selling the Tesla stock just to position himself in case he has to buy Twitter. And I think that's very bullish. And we can see that like the stock's recovered very well, since he's been done selling. And it's bullish because there's a huge lever for a major leg up in the stock price if he does not have to buy Twitter. He's said on Twitter that he's going to buy back Tesla shares with he's got like 15 or 20 billion of cash just burning a hole in his bank account waiting to buy Twitter. I don't think he wants to just sit on that cash, and he can't even spend that cash to start, the Texas Institute of Technology or a Twitter restart. That maybe he spends like 100 million or a few hundred million each of those, but then there's still $19 billion of cash in his bank. He's going to buy Tesla stock back. I mean, with a very large amount of that. And if and when that happens, I think he'll do it in such a manner that's very similar to how he sold it in the open market. And you'll see 3 days in a row, 3 business days in a row where the stock gap, goes up like $50 plus a day. And people are going to be like, what's going on that everyone's buying? And you'll get the forms, the regulation forms on the end of the third business day showing that he bought a bunch of shares in the open market, So to me, that seems like it's going to happen if the Twitter deal falls through. So I'm very curious to see how the Twitter, I'm torn because I want the Twitter deal to work out because I want Elon to control Twitter. I think it's really good for humanity in general and the future of how we communicate in like a hive way, on Twitter and the internet. But if it doesn't work out, I'm also very excited for Tesla stock, because the Tesla stock to me means it's like imminently going to go up. What do you think about this Elon done selling and is, it's good, right? I mean, you agree.
Looking at like the most recent cap table of the deal, it looks like there could be another like maybe $2 billion gap. So it's certainly possible if he can't find additional fund. I think he'd be able to find, $2 billion from like the Larry Ellisons of the world and Ron Barron and like people who just, want to co-invest alongside his Twitter deal. But like worst case scenario, if he can't find anyone else, then okay, he needs to sell a little bit more. But I mean, 2 billion of sales wouldn't have nearly the kind of impact that the previous 2 rounds had. So I think it's possible that you'd have one little cleanup sale if this gets forced at the full like $54 share price. But I think the likelihood of that is low. And I think it's. I don't know. I mean, I'm trying to peg the likelihood of this deal closing, and I think it's more than 50%. I don't know. I'd say it's probably like 75% chance the Twitter deal happens at some price. But I think it's most likely that he's not going to need to sell.
Yeah, and even if the Twitter deal does happen, which I'd be happy for, I'm actually excited for that to happen to see where it goes. Twitter, once he takes it over, we can get rid of all the impersonators and a lot of the spams and bots, and it would be an incredible product experience. And there's just a huge future. I think that there's a good chance if the Twitter deal does get approved, he gets more secured investments coming on board with him that he's uncertain about right now. And if he gets another like 5 billion of secured investments coming on board with him, then he fears wouldn't come, then that 5 billion is 5 billion less he has to put into Twitter, and 5 billion more he could buy back of Tesla stock, if that makes sense. Does that make sense?
Yeah. Yeah.
So I think there's a very
Yeah.
good chance of that too, like a certain him buying X million shares of Tesla back anyway, even if the Twitter deal does work out.
Yeah. Yeah. So I kind of forgot about the Texas Institute of Technology and Science. Well, I think there
Yeah.
should be an addendum on there and add astronomical space studies or something like that.
That'd be great. Yeah. Yeah, that'd be neat. I think that'd be a good acronym for us to
It's an
follow.
opportunity.
It's opportunity. Yeah. Yeah. Uh, and Soros buying Tesla, and he sold Rivian. So he bought Tesla some amount. It was a small amount, I think, right? Just sort of a token amount, like 20 million or so. I don't know, not a lot for the size of his fund or just in general. But you know, these filings are coming out of institutions. It seems like institutional ownership is coming up on Tesla.
Yeah.
And I think rightly so. And this is, you know, to me, institutional, Gary Black's tweeted a couple of times, like the list of institutional ownerships. And to me, it's like, it's a huge bullish sign because there's so many institutions that are not yet on board with owning Tesla, you know, and they inevitably will get on board. And to me, that means, you know, the stock's going to go way up once these institutions inevitably choose to own pieces of Tesla in their portfolios. They have to buy it. And the retail investors, a lot of us retail investors, sure as heck ain't selling it to them. We're holding it till, you know, till it goes to the moon, you know, so they're going to drive the price up. It's going to be, I don't know. I'm excited about the next 1 or 2 years as I think institutional investors will get on board with Tesla. I think it's a very positive sign to show that, you know, you start seeing incremental institutions get into it now from these latest filings at the end of, you know, second quarter. Third quarter, you'll probably see more and so forth. You know, what do you think about the Soros and the other reports of institutions?
Yeah, I mean, it's kind of funny because like the Soros one was relatively small. I think it was like 0.5% of their AUM or something like that. But then there was some other fund. I forget the name of it, but they went like 38% of their whole fund was long Tesla, something like that. So just kind of like
I saw that, yeah,
heavily overweight. And it wouldn't surprise me if they sell that down. So I that did get me a little bit nervous, just that you could see some pretty serious sell pressure. You know, if they're like a short term kind of holder. So I don't know, hopefully they're super convicted and long-term holders, but I do think that's a risk that, you know, they could sell down a huge number of shares. But I think the bigger opportunity, the bigger point is like you said, that broadly speaking, most institutions are like either own zero or are significantly underweight Tesla, you know, relative to what you would think they should be relative to like their weighting within the S&P, for example. So I think this, you know, investment grade rating could be a catalyst along those lines to really get some more institutional ownership. And we've seen how important these flows can be. I mean, just with Elon selling and how much that moves. If you know, figure institutions could be selling or could be buying shares, you know, 2, 3, 5 million at a time. I mean, it across a wide swath of institutions, I think it really does hold the potential to kind of get the stock a leg up to, you know, I don't know, a couple $100 more, which is kind of like in this environment where the fundamentals are improving so much. I mean, I think we still believe that Tesla is undervalued just on like a fundamental basis of the existing car business, and then you've got all of this upside potential based on, you know, autonomy and bots and energy and all these other like options out there. But it's just, I think it would be great if these institutions kind of get the core business value to where it probably should be. And I think there's the potential that that'll happen this year.
Yeah, absolutely. And the Tesla split that's on our list here to touch on. I mean, well, back to Rivian. They sold, I guess Soros had Rivian and sold it. And then I see Gary Black bought some Rivian stock in his ETF. That was really surprising to me. Were you surprised by that, Matt? Did you think it was like in his blood to buy Rivian?
No, I mean, Gary surprises me. So yeah, like he talks about like the future fund and like all these mega trends and like some of the stuff that he buys. I'm not criticizing at all. He's been right with a lot of the stuff, but like Celsius is an energy drink company. I started digging into them and I was like, oh, I like the product, but it doesn't seem like it's a beneficiary of some mega trend. And then like Rivian, like Gary is such a like a numbers guy. And when I dive into Rivian's financials, I'm like, I can't get there. Yeah, maybe they can turn the numbers around, but like they're still at like roughly, I think it's 190% negative gross margin, which is better than where they had been. But like they've got such a steep mountain to climb to get that to positive, let alone to like covering their operating expenses. So at a valuation where Tesla was back in 2019, I struggle to kind of ascribe that same valuation to where Rivian is today, when they've got a much harder hill to climb in my mind than Tesla did back then. So
Rivian is like it's like a venture capital investment still, just like sort of like Rocket Lab for our fund in a way. But we believe in the long-term story for Rocket Lab to really become, solidify its place in the space industry. You have to really believe Rivian's going to solidify a substantial space for itself in the entire EV industry. And I'm not convinced, like the amount of hurdles you have to get through to do it, as we've seen from Tesla, it just seems, to produce the factory is the product, as Elon has said. And for Rivian to get the factory down the way Tesla has, Tesla's even struggling with Giga Berlin and Giga Austin right now. And they have like top engineering talent to get those in place. It's not easy. And I just don't see, I just think it's too much of a risk given their current market cap valuation they're being given. It's just, if they had a 4 billion valuation, I'd say, oh, that's pretty cool venture investment. I'd buy some, but 40 billion venture investment is like for the likelihood of success. And even if they do succeed, what that valuation could ultimately become as like a niche pickup player, like I just don't see it. Yeah. I think, it's just too risky. I think they're coming down more likely than up, but maybe if you get enough people getting on the EV bandwagon again and, just funds throwing money into all the EV names they can think of, then Rivian doubles or something, that's possible.
And just from a valuation standpoint, I should point out that they've got, I think it's like it might be $15 billion of cash. So with a $35 billion valuation that they have right now, I mean, it's really like a $20 billion valuation on their equity.
That's
and then
true.
Add in the cash. So that's and I think, to be fair to them, they do have an advantage,
a lot of cash,
massive cash pile, which is an advantage. But they're also burning it at a pretty spectacular rate.
What they should do is invest 10 billion of that cash into Tesla stock, and then and then when they want to tap it later, it'll be worth twice as much probably, and they can maybe survive that way. That's what they should do. They shouldn't just hold it in deflation, let inflation lower it for, Anyway,
I do want to like add on one point there though, which is like, I'm not an engineer, but like I went to Sandy Monroe's office a while ago, and they had like this part of the Rivian. It was probably like a 2 foot by 2 foot thing, and there were just like, to the naked eye, there were about 100 different welds on there. And so when they talk about like, the expense of like having all the robots and having all like the extra manufacturing processes, just in looking at the product once it was pulled apart, it was like, oh, okay, that's why their gross margins are so bad, because they're like they're doing all these kind of like value added steps instead of just designing it in a more simple way where you don't need 100 welds on this little 2 foot by 2 foot component. So, hopefully they can improve that over time, but like they've been designing these things for like 10 years and they're just now bringing them to the market. So I don't know. I hope they've got the DNA to constantly be like reevaluating and making these sorts of improvements, because if they don't, I don't know how they can flip to positive. Like maybe they can get to like negative 20% gross margins or something like that. Or they raise the price to like $140,000 and then they've got, a nice positive gross margin. But
there's only so many they can sell at that price.
Exactly.
At that price, you can't sell too many.
Yeah.
And boiled down, AH in the YouTube comments says, does Rivian have anything priced to take advantage of the EV credits? I don't think so. I think they're completely cut out of that equation, unfortunately. So people are going to look at Rivian and be like, I don't know, maybe I'll get the F-150 or the Cyber truck and get my 7,500 credit, anyway. We'll move on. All right. So Elon, one other thing I want to talk about Elon before we go into touch on Roblox and Rocket Lab and then Q&A is Elon wrote this Chinese cyberspace essay and for a Chinese cyberspace magazine. and I read it all, and it was really interesting. Like, he really put thought into this, essay. If anyone hasn't read it yet, I highly suggest reading it. It's like, carefully crafted, covering like the 3 or 4 main things he's contributing to. He wants to focus on, sustainable energy, the Tesla bot, and Neuralink, and space travel, or become interplanetary. Those are like the 4 focus points. But I like that he went into some more detail on the Tesla bot there, and talked about it helping out like your elderly mom and dad. That's a use case that, people in our community have been throwing around, like helping out your parents and stuff. In a decade, he suggested that maybe you could like buy it as a birthday present for your parents or something. So there's a lot of info kind of leaked in this, not info, just a lot of thoughts that Elon is having that's sort of new, that he hasn't really expounded upon in interviews that I've heard, kind of leaked out a little bit into this essay. Is there anything that, and I like that he focused on Neuralink a lot on this essay, and how he thinks that, it's going to be very hard to merge with AI, but at least on the way they can relieve a lot of human suffering by, these these chips put in your brain and such. So, he's thought about these things deeply, and he's giving more detail on this essay. And I think I like the fact that it was done in a Chinese publication, because China is so important for him to have a good relationship with. And I think he's doing a great job keeping that relationship optimal. What do you think, man?
Yeah, reading through that, I was kind of struck by, the fact that it was just like an overview of why he's doing the various different things that he's doing. I think a lot of the commentary in the US media is just like, oh, he's like a egomaniacal billionaire who just is like trying to like put implants in your brain, and like, just ascribing all these weird, like nefarious kind of motivations. But we had the benefit of like reading the Wait But Why series several years ago, which for me was like a big opener of understanding
huge.
like the rationale of why he's actually doing all these different things, and really understanding how he thinks. So when I was reading through that, I thought, oh, okay, like, I'm sure there's not many, a high percentage of the Chinese population that's reading Wait But Why. So this was kind of like a foray into
miniature version.
Here's why I'm doing what I'm doing. Yeah, exactly. So I thought it was really great just to kind of give that kind of example of we want to have a better future for humanity, and kind of here's the way that I see us being able to achieve that goal, and that's why I'm doing all these different things. So I thought that was really helpful, and hopefully that will help to kind of smooth over some potential negative implications. I mean, there's been a lot of billionaires who've had bad outcomes in China recently. I mean, think of Jack Ma and what happened to him. Now, Elon's obviously not a Chinese national, but I think the more he can do to kind of explain why he's doing what he's doing and generate goodwill within the country, I think it's just going to be a good thing for him there.
Yeah, absolutely. Yeah.
So, what we should probably, in the interest of time, keep moving on to Roblox and Rocket Lab earnings. So, I mean, what was your thought of both the the earnings release that they had, and the earnings call that Roblox had?
Yeah. I mean, Roblox, I'm still a huge fan of. I think it's a big part of our future. I think the earnings recap, the numbers, the metrics that stuck out to me most, that was the July numbers. The record-breaking July stats. I have it here. I think 58.5 daily active users for the month of July, and that's a record for them. And July is typically a great month for them, so you'd hope it to be a record anyway. And it is. And 4.7 billion hours engaged. That's another record for them. And I have to remind myself, the bookings, they like changed their bookings accounting, or they have to just, a couple of years ago or a year when they went public or something, and it messed up some of the comparisons to previous quarters booking, similar to how Rocket Lab did something similar to changing how they account for revenue now, based on waiting until the launch happens versus trying to accrue it over time up until the launch. So the bookings take like, a few years or something to, like, when they take in Robux from someone who bought a durable item, like a avatar item, piece of clothing, then it takes like, several quarters for it to kind of amortize into revenue for them. So that's tricky. People have to keep that in mind when they're looking at bookings numbers, because if you look at the booking numbers and you compare it, you're like immediately like, oh, the bookings are down, they're not so good, but you have to keep in mind they've changed kind of some of their accounting metrics over the last year or so, I think, on how they do that.
Yeah, and I've tried modeling that out. It's very hard to like translate
very
bookings
hard.
into revenue because it changes.
Yeah.
If it was just a constant like equation, you could figure it out, but it changes all the time.
Yeah. So I try to like look past that, because I know I'm not gonna drill on that too much. I look past that, try to look at the bigger picture. And the July metrics to me are the bigger picture of like hours engaged and daily active users. And the demographic of 17 to 24-year-olds is exploding. And part of that is the aging of the, 12 to 16-year-olds sticking with Roblox. And part of it is attracting new 17 to 24-year-olds that have never used it, So you combine that and you have this exploding demographic of 17 to 24-year-olds. And on the earnings call, one thing that stuck out was Dave Baszucki gave more detail about, and I think that their CFO too, gave more detail about their immersive advertising that they see expanding. And I really like the model they have. So basically, people are in a Roblox experience, and the way you see it is like Burger King or Louis Vuitton or whoever it is, some brand, puts up like a shop in the middle of the game that someone created, and it lets the users who are playing the game decide if they want to go to that shop. It's like a porthole to go to the Burger King world, or and then they can come back, but they can go and do it if they want. And it's sort of immersive advertising. It's not like forced upon them. It's just kind of there if you want to go see it. It's not like a 30-second commercial you have to watch or something, And I think the thing I like about this business model with the immersive advertising that they're pushing out is they're making it self-service. So I think this is a big thing. When I worked at Interactive Brokers, they did something similar with self-service. They didn't execute it as well, but I think it was very forward thinking. It was the right thing to do. And so if you're an advertiser and you want to market yourself if you're a product, like let's say you're Louis Vuitton, you want to market yourself on Roblox. Well, Roblox gives you all the tools that you need to do that, and you don't have to even speak to anyone at Roblox. You could potentially just do it all on your own if you have someone that works at Louis Vuitton that knows how to use Roblox. So Roblox does have a support team or a relationship team that will help a little bit on guiding you through that stuff, but they don't have like sales executives in Roblox trying to court Louis Vuitton and try to court the NFL to come onto Roblox, if that makes sense. It's a different model, and I really like it. I think it's much more scalable as Roblox becomes bigger and bigger.
Yeah, I thought that was really interesting. I mean, they're basically kind of doing consulting right now, such that these brands can basically have their own kind of in-house Roblox teams.
Yes.
But they kind of recognize they're just at the beginning transition, so they're going to probably spend a little bit more time like hand-holding in these early customers. But I think Dave made it very clear on the call that that is not, they don't want to be doing this in like 5 years. They want every customer to be kind of doing stuff on a self-service basis. So, my finance brain starts thinking about that and be like, okay, well, their margins are not going to be worse in the future than they are now if there's, kind of growing base of customers having these sort of monetizable experiences. And, you don't have to scale up these same economics that you're dealing with right now just to kind of teach the customer base. So, I got pretty excited, thinking of the potential of that. And like, it can sound, if you haven't seen some of these, it can sound a little bit like off-putting or like, oh, who wants to go to like Burger King world? That sounds really lame.
Yeah.
But like I've actually gone to some of these, just as due diligence, I want to see like, what does this actually look like? And like Chipotle had a really cool thing a couple months ago, and Louis Vuitton's done a couple things. Vans had like this awesome like skate park experience thing. I'm like, I'm not a skater, but I could definitely see if like I was in that demographic, I would want to go there. And so like they're coming up with really novel, interesting things where you would actually want to spend time in these virtual experiences. So it's really exciting, I think, to be at the early stage right now, see some of the traction they're getting.
Yeah, the key with Roblox, and there was a really cool CNBC segment, I think on Thursday or Friday, like a 2 or 3 minute, maybe a 5-minute segment. I even have paused it and rewinded it and had my kids watch it with me because they play Roblox. I'm trying to get them to think about their future. But they interviewed, I was trying to find it so I could tweet it out. I couldn't find it, but maybe they'll post it. Maybe that was that day. Maybe they have it now. But they had a guy get interviewed who's like this 23-year-old kid that's been using Roblox since he was 12, but for the last like 4 years or something, he's been designing jewelry, like items, virtual items on Roblox to sell. And he sold 25 million of these items over the X amount of years he's been doing it. And he made like $600,000 2 years ago, $1 million last year. And he's like living in his own house, and it's describing his work day, and they're interviewing him, and they're asking him questions like, and he's working for like name brands like Burberry and others to help design jewelry on Roblox for them, getting paid by them. So this is like an example of so many people in this Roblox economy budding, I think. And they asked him a question like, are you doing this elsewhere? Why are you sticking just to Roblox or something like that? And he said, Roblox is where the people are. There's no people in Sandbox. There's no people in these other places that I can build stuff and sell to, in a way that makes me money, So like, that's the thesis here is Roblox has this bigger traffic fulfilling loop. It's critical mass. It's like the event horizon of the black hole. It's gone past that event horizon where you can't get back. And that it's just getting bigger and bigger and bigger, and no one else is even close to that. Maybe Fortnite. I don't know. Fortnite seems to be maybe the closest, where they have a big developer community. They're trying to do more development, but I think Roblox by far is it seems like the leader. I mean, metaverse is this term we throw around, but it seems like a leader for this new internet co-experience thing that kids are growing up in. And Dave Baszucki had a really good quote on the conference call or something about it, where they're not even a gaming they're not even a gaming platform. They're a future the future of human co-experience or something like that. It was really interesting, insightful of how he thinks about the long-term vision. I'm excited. I think Roblox could be another year, a couple of years till like plays out where more people get excited about it than now. But I think it's a trend, and it's not a fad. Is it a trend or a fad? If it's a fad, then Roblox is it's way too valuable. It shouldn't be 20 billion. It should be a 5 billion market cap. But if it's a trend, which I think it is from these July numbers, it's going to be worth a lot more in the future, we think. So,
and one of the things that kind of stuck out to me too, just in kind of validating that long-term thesis, was another thing Dave said on the call was like a couple of years ago, he said that he thought there was going to be a studio within Roblox that had like 100 developers working on it, and they've hit that milestone, and now he's like seeing more and more like design studios or game studios working on the platform that have a staff of like 100 or more, and soon there'll be like 500 or 1,000. I forget the exact number that he said. But so like if you're a business, if you're a capitalist and a game developer, and you are employing 100 people, that's like serious business. You've got to be like earning decent economics in order to support a staff that large. And so
you got to choose the platform carefully that you want to do that on, right? You think day and night about what's the best platform, and they're choosing Roblox,
Yeah, exactly. So, I mean, following the developers is, I think, a good indication of where the future opportunity lies. So more so than like whatever the latest quarter's metrics are. I mean, look at the developers.
That should be the new motto. Instead of follow the money, it should be follow the developers. That should be the new motto. Yeah.
For sure.
So Rocket Lab, I mean, that was also another earnings. That was last week. It was a busy week there. I mean, Lemonade, and now Rocket Lab and Roblox.
Yeah.
I mean, what do you think about Rocket Lab? You saw the earnings. I mean, I think kick us off.
At a high level, it was kind of interesting watching both Rocket Lab and Roblox, because they both dipped pretty heavy in after hours, because the immediate quarter's metrics were not as great as I think people were expecting. So there was a bit of a miss there. But then like the next day, both companies rallied like, I don't know, 25% or something crazy like that. Roblox wasn't quite that much, but a big turnaround. And so I think the news that happened this quarter was like gross margins in particular were lower than the low end of guidance. So there was a bit of a miss there. Part of it, they said, was on like the mix of launch products. But I think the bigger piece was that they acquired this company Soul Arrow, which had enabled them to get a huge chunk of revenue, but it was a low margin business. I think they said it was like single digit gross margins. And essentially they just had that part of their business in Q2 was a bigger percent of the mix than they were expecting. And they haven't like been able to turn it around yet. So I think when you saw the after hours moves, that was what a lot of people were reacting to, was like, okay, well, sure, you're growing at a really impressive rate. The year-over-year numbers were pretty phenomenal. And even quarter over quarter was great. I think one of the pieces of bad news was that the backlog actually shrunk this quarter for the first time in a long time. But I think they did a really good job kind of addressing that, just saying like, hey, this is like a very lumpy business, and the sales process for a lot of these launch contracts, you might have 3 sales in one quarter, and you may have 0 in another, and you may have 6 in the next. And it's just like, if you give too much credence to to backlog growth in any one particular quarter, you miss the bigger trend. And the bigger trend is that they've got an absolutely massive backlog. I mean, it's like 3 years worth of launch contracts. Or it's not just launch contracts. It's another kind of misnomer about Rocket Lab, is that they have a decent size of
all space services.
Yeah, space systems, I think it's called. So that was interesting. But the thing that really got me excited on the call was, one, they said they've got a very good plan in place to get the Solero margins back up to I think they said 25% range. And if you look at where the margins were before the acquisition, and even in a lot of quarters recently, I mean, they've had very healthy kind of like high teens, low 20s gross margins. And so they really think that those targets are achievable in the long term. And then another thing that they were talking about as an opportunity is all these other like launch providers that have failed to reach orbit. Like there's a decent number of payloads that are out there on, that kind of were offered bargain basement pricing on their launch services, but like they need to launch. And if you signed up for, I don't know, Firefly or one of these other companies that just haven't been able to accomplish what Rocket Lab has, but there's a good chance, Peter Beck thinks, that Rocket Lab may be standing in line to get a lot of these contracts, and they're not going to chase price, they said, which I thought was a really good indication. And on top of that, they did a really great job stressing how responsive launch is going to work for them. So in other words, they're a lot of times, the customer would say, okay, I want to launch on August 15th. And then August 10th comes around and they say, hey, by the way, my satellite's not ready. I need to, move to August or something like that. And then like Rocket Lab's kind of screwed. They're like, all right, well, we wasted all this time. So they're trying to be a lot more dynamic in like rearranging their entire launch schedule such that they can pack in a lot more launches in any given cadence. And they were even saying, which I thought was kind of an interesting idea, that it was completely within the realm of possibility that somebody could call them up within a quarter, sign the contract to launch, and actually launch the thing before the quarter ends. So they're like, we're like so flexible right now that we could have a launch that doesn't show up in our backlog today that we recognize within the quarter. So they're really trying to push the needle in terms of being as flexible as possible to both accommodate like schedule delays, but also to pack in as many launches as possible. So I thought that was really good news, and creates a lot of value, and they can actually upcharge for that service, but their costs don't change. So that was, a lot of margin potential, a lot of growth potential. And I came away super bullish from it, honestly. I think they've got a huge runway of growth ahead of them.
Yeah. The way we think about them as well is sort of like a venture investment that you can buy in the public markets. It's got a $3 billion market cap for a space industry that's set to explode later this decade, and where SpaceX is already at $120 billion market cap valuation. So, I mean, $3 billion market cap for what we think is going to become second place to the space industry versus SpaceX. That's very attractive to us, and all the signals are pointing in that direction continuously. Each earnings call, and every time we hear more information or signal about this. So yeah, I see a comment from Enrique Montezuma saying that that Astra canceled their current space system to move on to a bigger rocket because of Rocket Lab's electron dominance. I guess that sounds interesting. And I see Doge Nation saying he loves. We didn't coordinate this, Matt, but we're both wearing plaid shirts for Tesla. I got this at the Gigafactory, and you get the plaid motor. We didn't coordinate it though. So
yeah, I got this from Monroe and Associates. They gave me a nice goodie bag with all sorts of stuff.
Cool. Well, why don't we go into Q&A? We've gone really long into this. Maybe we'll go to 20 minutes of Q&A. I know there's some questions on Twitter already that came up, and there's a lot of questions in the YouTube comments that came up in the last 45 minutes. Alex, do you want to queue up the questions? We'll just go into that for 20 minutes or so. From Tesla Tiderium on Twitter, do you see enough medium-term growth in the space industry for Rocket Lab to become profitable? I mean, just my gut feeling is certainly, but I haven't put pen to paper on the modeling of the spreadsheets. I know Matt's done a bit more of that, but I certainly have faith that the space industry is going to continue to grow. Satellite constellations going to be big business. All the lower Earth orbit launching capabilities that Rocket Lab has demonstrated, reliability on, is going to prove itself to be, second place to SpaceX. And SpaceX, it's not going to be it might, even if it's a winner takes 90%, that still would mean Rocket Lab would get a lot of that other 10%, you know, and I think that's possible, but I think it's going to be not 90% for SpaceX. It might be like 60-40 and 40% for the rest of the industry, a bunch of companies, Rocket Lab being a big part of it. You have any thoughts, Matt?
Yeah, I mean, the thing I really like about them is they're already gross margin positive, and their operating expenses are not growing as fast as the revenue. So that gets to the whole concept of operating margin, which is like obviously required in order to reach profitability. So I mean, thinking about their top line prospects, I mean, they've got this $500 million backlog like that we were talking about earlier, and that continues to grow. Not this quarter, like I said, but over time, if you look at the trajectory of that, it's been like growing. Their orders have been increasing at a much higher rate than they've been able to fulfill them. So it's kind of I can't talk today. It's kind of a demand dynamic similar to Tesla, where like Tesla is growing their production capacity at such an astounding rate, but yet still demand is outstripping it. And so I think that's what's happening with Rocket Lab. They just launched a second launch facility in New Zealand, and they are opening one in the United States now. So really increasing their launch cadence, but despite that, their backlog is still growing. So they've got a huge runway, I think, for top line growth. And Adam Spice, their CFO, I think he's got a very great handle on their financials and kind of like what is driving them, and more importantly, how are they going to improve margins going forward. I mean, for a company at this phase where like they're not profitable yet, he spends a lot of time talking about how they're going to improve profitability going forward. So like I 100% think that they've got all the right dynamics in place. Now, can they pull it off? To be determined, but I really like their chances, and if they can, then I think there's significant appreciation potential.
Yep. Next question from American Yoshi on the YouTube comments. Question: what are your guys' thoughts on the halt on the long-range Model 3? I'm guessing the 2170s are being utilized on higher margin products and to not upset customers if they lower it to 55K come January 1st. Yeah, this is interesting. I mean, Elon said that the demand, I forget what was the wording he used? They don't, the supply, I forget the exact. My thought on this is they see demand so big for the Model Y in particular, and I don't think they're building any Model 3 lines in Texas, for example. So I think that maybe they are, but maybe they're building a line that's like convertible to Model 3 if they need to. But I think most of their capacity they're building as for Model Y, because demand for Model Y is so much bigger. And it's more marginal. It's better margins for them too, with the single casting and all that. But also the Model 3 long range, it uses more batteries, and if they can cut the batteries by 25% per car for the Model 3s, they can deliver more Model 3s. And so they maybe they're thinking ahead in terms of battery supply constraints for the next year or so, and they just want to make sure they can maximize the number of cars they deliver. But also the margins on the Model 3s are not quite as good, and maybe the Model 3 long range, it wouldn't have been as, if they tried to keep it under that $55,000 price point, it wouldn't have been as good margins either. So there's probably a lot of reasons combined that just make more sense. You have any thoughts, Matt?
Yeah, I mean, I kind of subscribe to the thesis that it's related to this new EV tax credit thing. So I kind of suspect that it's not as high margin as it's definitely not as high margins as the performance. So I think it makes sense for Tesla to kind of prioritize performance and variance for the same group of cells. So if you are cell constrained and you can't, you would prefer to be able to upcharge customers more for the long range variant, starting in 2023, when you can actually, have the tax credit to absorb, let's say they increase prices by $5,000 on that variant, for example, that you would be able to have better margins over the cumulative time period if you prioritize, using the limited cell supply you have for performance Model 3s. And then next year you can raise the price on the long range variant and not impact customer demand so much because they've got that tax benefit. So to me, that seems like the most likely rationale. I mean, the fact that this is not happening worldwide, it's the U.S. I think Canada too, but I kind of think it's really related to that.
Yeah, probably. Next question from Justin on the YouTube. What are your guys expecting to see from full self-driving 10.69 and AI day? Or FSD, I should call it, not full self-driving, because FSD 10.69. I'm excited. I mean, Elon's really hyping this one up more than he has in the past. It's been a couple months, I think, since the last release, which is a long wait time. Typically, they've been doing it once every 2 to 4 weeks or something for much of the last year. But now it's been like 2 or 3 months, and now 10.69. It's a big number to him, obviously. So I think there's significance. It's got this Chuck Cook left turn down, probably better than any other version. Where so I'm excited. He says it's already close to 10.11. It's pretty close to the next version,
the 11,
the version 11, the full stack or whatever. He says close to the full stack already now. The architecture's been coming in there. So I'm just excited to test out and see. I don't know what specifically to look for. I asked him if reverse summon would be in this one, because I think that'll be a really neat feature once that's available. But I think he said he was waiting till full stack was done before the reverse summon would come out. I think he mentioned that a couple of years ago or a year ago in a question. So Matt, what do you think about 10.69? What are you expecting? Anything?
Yeah, I mean, somebody leaked the release notes a couple weeks ago, and one of the things that it said, in addition to the Chuck turn, which is certainly getting a lot of the attention for good reason, but was like improved centering and essentially driving on unmarked residential roads, and that's like a huge issue for me. I mean, this last version was definitely a step back in terms of functionality relative to, I think it was like 10.11 before, which was great for me, and then I got 10.12, and it's kind of been relatively sucky for the last couple months for me. So I'm really looking forward to this one, because I've not enjoyed this last version. I wish I could go back to the version that I had before, and it hasn't improved over time the way that other FSD releases that I have had have done. So I'm really looking forward to that. Hopefully, a lot of these residential issues that showed up in those release notes actually are fixed. But they've been working on this for a long time. And one of the things that I find so interesting is we're running out of time. And if we're doing a release only every month, 2 months, I don't know how you could have a level of confidence that it's actually going to be solved this year. And I don't really think Elon's being disingenuous about it. So I would suspect that this actually is like a major step forward. Because like what I've seen is not at all close with the drives that I'm doing to being able to check out.
Yeah, I think so too. And AI Day, the second part of the question, that's coming up soon. I think I can't wait to see the Tesla bot demoed. I mean, I remember when he mentioned it last August, and I was all excited to talk about it. Like, why did most people stop talking about it right after, like, dismissed it, like it's not going to happen? Now it's coming around, and I think people are getting rightly excited about it, as they should have been all year, because this is a big deal, the Tesla bot. Like, the Tesla bot is the plan to get Tesla, like, to 10 trillion plus market cap valuation in the future. If you think it can get there, I think the Tesla bot has to be part of that. And I think it's very possible. And we'll get a lot more information on this AI Day part 2 in September. So this is like, I don't know if people realize, but this AI Day part 2 is like bigger than Battery Day. This is like way bigger in significance than Battery Day was at the time. And Battery Day, I thought, was a big deal back then. That was before the Tesla bot. That was like the most important thing Tesla had to show. Or the full self-driving day. It's even bigger than the FSD. This is where Tesla is going to show their plan, more about their plans for the future of how big Tesla will become in terms of making the economy an economy of abundance that Elon has talked about. So this is like the grand vision we're going to be shown. Now, the question is, in my mind, is the AI Day part 2, is it really truthfully the grand vision for the sake of showing the grand vision? Or is it more of a recruiting gimmick disguised as giving out a grand vision? That's another way to look at it. Like, is he just trying to recruit use it? Is the primary purpose of this more to recruit AI talent than to
Yeah.
actually, be truthful about this grand vision? I think it's a combination of both, to be honest. I think it's both. But if it's one, if it's primarily just to recruit, then that's a possible take some people might have. But I think it's for both. I don't know, Matt. What do you think? Any
Yeah,
thoughts?
I kind of think it'll be similar to Autonomy Day. And like
Hmm.
if you go back and look at Autonomy Day, like they spent the vast majority of the time like nerding out on technical details that were like way over everybody's head. Like
Yeah.
all the chip design. You remember that chip design like
Yeah, I
presentation?
remember that.
It was
Yeah,
interesting, but I was like, I
it was
don't know what
interesting.
any of
Yeah.
this means. But then
Yeah.
at the end, like Elon, I thought did a great job of kind of wrapping it all together, being like, here's like how that translates to the economics. But like
Hmm.
nobody got it, or at least nobody gave them credit. So I kind of suspect it'll be something similar, where like their primary concern is going to be recruiting and kind of showing the technical details of the problems that they're working on. But I also think it's going to be broader than just the bot. Like the bot, I think, will be a piece of it for sure. But I mean, AI is like vision-based AI is certainly like there's more that you can do with it than just driving and having like a humanoid robot. So I'd be curious if there's some other kind of like application that we haven't thought of that Tesla is considering working on. And I'd be very interested if there were some talk of like an AWS type service where you have like, like Dojo as the service, or like some sort of like training algorithms that actually had partners that were lined up to take advantage of that. I mean, they're talking about building like the biggest supercomputer in the world right now with Dojo. And I'd have like, if you look at the economics of how expensive it is to rent out those supercomputers, I would imagine there's a business opportunity there that Tesla could try to monetize.
Yeah.
So I kind of don't think they will go down that path, but I think that would be the one thing that, like, in terms of what would move the stock in the short term, I think it would be some sort of partnership like that they could highlight, as opposed to, them saying like, oh, we're going to replace the entire labor market and we're going to change the meaning of what an economy is. The market's going to see that and be like, whatever, Elon, like,
yeah, they will.
Which I think is fair, because like, how long have we been talking about self-driving, and like we're still like, to be fair, I think it's a reasonable to discount some of these promises, because like here we are 5 years, almost 5 years after Autonomy Day, and like I'm still having drives that are not, we're like close to like working. And Larry, I did see your comment. Yeah, I have tried just this past week after the maps update, still same issues, disengages quite a lot, and it just has not been great. So
it's
I
not
don't
fitted
know.
well for outside of California, man. I mean, California, it's working phenomenal for me, FSD beta. Like I drive all the time with it when I'm not in a rush and I'm like just relaxing. I want to listen to something and focus on what I'm listening to or whatever.
Yeah.
Like I'll put it on, just watch it. It does phenomenal. There's a couple of spots I know I have to be extra careful and take over maybe or whatever, but it works phenomenally well in California, where I live, and what I've heard from other people. But yeah, in other parts of the country, it still struggles. But I think he mentioned something like 10.69 should hopefully help with that to some degree.
Yeah.
But the AI, the other thing I want to say that I think the future of the bot, like, is Tesla, I think, is going to have a platform similar like the Roblox platform or the App Store platform for iPhone. It'll have a platform for the bot where you'll have a bunch of people, developers like me or you, or we're not developers, but just regular people that have businesses of training their bot. They'll have a bot they buy, they train it to do some kind of task or to dance or to do something, and then they can sell it on the bot store or in Tesla's bot store or something. And then me at home, I can look at it and I could buy that app and download it into my bot and do immediately what someone else just trained the bots to be able to do. And it'll be really interesting to see how that economy evolves. I think that seems to be the most natural. Initially Tesla will do their own development for factory use cases, or maybe last mile delivery or whatever, or last foot delivery or whatever, out of the autonomous car to bring it to your doorstep or whatever it is. But I think it's inevitable. It seems like the right thing to do to open source it, similar to what Roblox is doing to the game development, or what Apple did to the App Store. Open source and let individual independent people create businesses out of making cool use cases for the bot and then letting people buy those cases. So that should be cool. I'm excited to see how that develops. I think that's 5 or 10 years away.
Yeah. Really, I love these presentations. Like, like watching Autonomy Day was like one of my favorite things, because I was just like, this, it was mind blowing. Like I've seen a lot of company presentations in my day, and like usually it's like some like something similar to what I would have seen in my MBA program, where it's like, oh, like we've got great product market fit, and like we think we're like in a growing position of power with like compared to our peers. And Tesla doesn't follow that playbook whatsoever. They're just like,
No.
here is like the PhD level like details of what we're doing on this super technical problem, and we're gonna just like beat you over the head with like all this. And it's just like, yeah, they're smarter than me and they know what the hell they're doing. And then at the very end, they kind of tie it together and be like, here's why this is such a big deal. And so I kind of think it's going to be a similar sort of situation this time, where like they're going to go into all sorts of crazy details, and it's going to have like some weird applications that we haven't thought of. But I cannot wait to just see what they come up with and they like put it all together. I just know I'm going to like have such a great time watching it.
Yeah. I can't wait to see the actual physical bot and what they've done with it. It looks different from the original one, he said. And Xiaomi or whatever, they tried to front run Tesla with their version of a
constipation bot.
Yeah, I was walking out like that to me is probably child's play compared to what Tesla's doing. So it'll be very exciting. I mean, Chinese people, not the people, but the Chinese companies. I mean, they are probably a close second place to Tesla in EVs, and maybe they'll be a close second place. The closest second place to Tesla in the bot, I would imagine. So maybe don't discount it. Maybe the Xiaomi company is going to do a good job in the future with the bot. We'll see.
I could imagine like if the Tesla bot ever came out on stage, like walking the way that did, would be like, nope, that's not right. Nope. It's gotta walk like more assertively or something like that.
Yeah, exactly.
So, I can't wait to see what little surprises they have up their sleeve, though. I really am looking forward to it.
So we're about at the hour mark, a little after the hour mark. Let's just do one more question and we'll wrap it up. Let's see here from Justin on the YouTube comments. Matt, when Ethereum moves to proof of stake, what do you think of the theory that Ethereum will experience a Tesla to S&P 500 type liquidity squeeze?
Yeah, so I don't like to talk about Ethereum a lot publicly, just because we don't hold crypto within the fund, and most people, like crypto is such a tribal kind of space in general. So I don't like to kind of wade into those waters very often. But since you asked, I will just kind of give my high level like view on it, and I think the thing that I think is really interesting about the move to proof of stake is that it's a change in the structural flow. So kind of like put fundamentals aside for now, like crypto fundamentals, you could argue about a lot. But the thing that's really important is that like you're getting rid of the stakers, or sorry, not the stakers, the miners, who right now account for something like 80% of the sell pressure, or they sell about 80% of all the ETH that they generate. So you've got like this kind of inflationary supply of ETH that just to pay the miners for their energy usage and like their compute power and all that. And then ETH miners sell about 80% of that, which creates kind of like this continual, I think it's something like $20 million of sell pressure a day, something like that coming from the miners. And so like overnight, September 15th, 16th, they're saying is going to be the target date for the merge. You're going to get rid of that entire sell supply pressure, and you'll be in this position where you actually have net buy pressure just with the way that the staking protocols work. So I think it's a really drastic change in the short-term flows that I think has the potential to have a pretty massive liquidity squeeze. I don't want to speculate on how big it could be, but I think there's really no precedent to or like it. I think for the potential that it has. There's like the triple halvening. I won't go into all the details of it. I'm not like an ETH maxi. I really think like ETH has its place and Bitcoin has its place, and they both will thrive. But in the short term, I think ETH, this whole merge play has the potential to be really quite drastic. So I'm curious to see how it pans out. And I think people could be surprised. I think it's the sort of thing that I think is just completely unprecedented, and people don't realize just how unprecedented it is. And so we'll just see what happens. Like there's some people saying it's going to moon. There was this guy a while ago who said it was going to go to 150,000. Like I definitely don't buy that. I think he's even backed off from that since then. But it's like a really drastic change, and I'm curious to see what happens over time.
Yeah, yeah, me too. I'm just watching from the sidelines. To me, it just feels, I loved it. Like we talked in the very beginning, it'd be great to get Brett Winton on and have an interview with him about stocks in general and Tesla and the stocks they like and the bullish case on that, but also touch on the Ethereum, Bitcoin differences, or his skepticism on the Ethereum. I'm skeptical in this because I just feel like it just seems to, I've had half a dozen people, very smart people, including you, Matt, and a couple other people try to explain it to me, the proof of stake, this thing that's happening. And it's very technical for me and very abstract. I just can't wrap my head around it the way I wrapped my head around Bitcoin in early days, trying to figure out the Byzantine general problem, why I thought that was fascinating to solve and why I thought that it was a novel thing then to invest in. I just don't see the same case with Ethereum, but people, I just don't understand the mechanics of this as well, probably. But to me, it smells fishy. Like, how is money going to be created out of thin air with this? It seems like people are assuming money is just going to be created. Value, not money, value is created out of thin air from this technology change in Ethereum staking, that somehow the value just, and that means people can take that value off the table, which essentially means money is being created out of thin air. I mean, I think if something like that's happening, it's almost like the way I think it is like almost like a gimmick where it's just raising the value so much temporarily, but everyone's going to try to get out the exit at once. It's going to tank the price right after it. Like you better be the first one out the exit door. Like, I don't know. That's my thought. Like, just so many people are counting on this.
I mean, it's possible that like you have a lot of people unstake eventually, although there's strict limitations on how that can happen over time. But it's not like a gimmick. Like, it's just a change in flows, honestly. Like you're getting rid of stakers who are I keep saying that, you're getting rid of miners who are the biggest single source of daily sell pressure. So it's just like you're getting rid of a huge amount of sell pressure and like kind of creating a situation where there's like the staking rewards are going to go up, and so there's potential that it could become deflationary or significantly less inflationary. But one of the other things, getting back to fundamentals of it, we were talking about with Roblox was, like we said, follow the developers. And I think the similar sort of things happening in crypto. Like, from what I can tell, talking to people who actually are developers, like all the smartest developers are kind of like moving towards Ethereum. Cardano was kind of like interesting, and there were a lot of other.
It was like Avalanche, Polkadot. There was like
Avalanche.
a dozen you could rattle off.
And like those, like especially if you look at the charts and if you look at like usage on those networks, they were so inflationary that like the price is just like shot down. So like that's where I think you actually had like creation out of thin air, where you were offering people like 20% APYs on staking and that sort of thing. And like that to me is the unsustainable economics, where like, okay, a nominal yield, maybe you got 20%, but your real yield, if you account for the increase in supply, was like zero. And then these assets have cratered, and the developers aren't really developing on them anymore. So I think there's going to be a huge, there has been kind of a change where more developers have been focused on like developing, layer 2 protocols and things like that on Ethereum, and I think those actually have a chance to kind of scale up. Now, I don't have a long-term view on Ethereum necessarily, but I do think that it's much more likely that this is a positive catalyst, and potentially a very large one, than it is a negative catalyst.
Yeah.
In the short term.
Interesting. Yeah. I'm fascinated. I'm going to watch this closely. I'm very fascinated. When is this supposed to happen? Wasn't it supposed to happen like a year ago, then like 6 months ago, then like over the summer?
It was supposed to happen like in 2017, I think.
So is it ever going to happen, or is it going to just be infinitely delayed?
Just last week, they finally set the date. So there's a terminal total difficulty level, which they're targeting for September 15th or 16th, depending on the hash rate between now and then. So
I can't wait to see the Twitter craziness around crypto get like leading up to that. The last September 13th, 14th, 15th. I'm going to see everyone on Twitter being like, buy Ethereum now, buy Ethereum now. It's going to be... I don't know. I think this is a crazy game to play.
I haven't seen a lot of that, honestly. I've been following a lot of like Bitcoin and Ethereum stuff in the last year in particular. And my kind of takeaway, I'm not a neutral observer, but I think I'm semi-neutral. I'm not like in the crypto space at all, clearly.
Yeah.
But my sense from like interacting with both communities to some small extent is that like the Ethereum people get like Bitcoin and understand that it has a place, and they think that Ethereum has a place and has more utility. And so over time, like the flippening, and they just kind of think that Ethereum will gain share, but that Bitcoin will always have its place. A lot of the Bitcoin people are like religious, and like they actually talk about it in religious terms, and like the Immaculate Conception. And you got Michael Saylor talking about the 10 Commandments and how like it's inherently a good and
well,
like all this stuff.
Bitcoin's been around longer, and there's people so invested from an earlier date in it. Yeah, I agree. There's a lot of Bitcoin maxis that are a little too crazy.
Yeah, some of the like narratives around it though are basically like it can never be toppled because it's the best. And so like if Ethereum starts kind of encroaching and the market cap gets close to flipping Bitcoin, I think things could get real crazy because you'd have a lot of people that like bought into this religion kind of narrative that would just think this shouldn't be possible. So I'm worried about people, honestly.
If there is that flippening where Ethereum overtakes Bitcoin in terms of market cap, that the case for a digital gold is almost like is much weaker now, because the case for digital gold up to now is Bitcoin is it. But if suddenly now something else is it, then now now it's Ethereum. How do you know Ethereum is going to stay digital gold, for the next 5 or 10 years when something else comes around? So I feel like the case for the digital gold is really weakened. And so that's bad for all of crypto in my mind, in terms of institutions adopting, like gold bug people type adopting it as the future of gold. So I think all of crypto could be hurt and weakened in the medium and long term, especially if Ethereum overtakes Bitcoin. That's my worry, but we'll see what happens. Anything can happen.
I mean, it could. I would argue neither one of them is really a digital gold. I mean, you just have to look at what happened to the price pressure this year and be like, okay, that's clearly not a good store of value. If you want,
but you have to admit there's some amount of buying in Bitcoin for the case of it being digital gold. I mean, the Winklevi twins talk about it all the time. A lot of institutions have bought into it to some degree and saying, all right, let's put 1% of our balance sheet in. So that those people buying for that purpose, do they still have that purpose if Ethereum takes over? I don't think so.
Yeah.
So I think there's a lot of buyers.
You probably do. Yeah. I don't know. It'll just be interesting to watch. I mean, like I said, I'm not, I don't love debating this space. I mean, it's kind of been like a hobby for me, and I find the whole thing really interesting. But right now, I do kind of think that like the ETH camp has the better of the argument, at least for right now and in the short term. But they've got to earn it. Like there's a huge risk. Imagine there's some like crazy run up based on the merge, and then all of a sudden like 6 months pass, and all these people who've staked their ETH are now free to sell. I mean, that can send the price right back down, like faster than it came up. So I
but don't you think people are going to anticipate that and sell in this 6 month window, making the price just crash right after this? Don't you think that can happen?
I mean,
like,
if there's
how many people are buying Ethereum right now speculatively? How many people are buying? I've talked to at least a half dozen smart people that have, in the last like few months, that have been buying Ethereum with a significant amount of their net worth, but in a speculative way, because they think this run up is going to create, extra value for them. And their plan is to sell it when it's at extra value. They're not going to hold on to it. They're not holding Ethereum long term. And so I'm just worried about that.
Yeah. Well, it's going to be more volatile than less going forward. Like I completely agree with that. Like both up and down, I think. But I think that like even all those speculators, it's like if you look at the like normally Bitcoin and Ethereum kind of move in tandem, but over the last 3 weeks or so, Ethereum has like drastically outpaced Bitcoin. Bitcoin's basically flat. I think Ethereum's up like 50 or 30%, something like that. The question I think then is, will the sell pressure from all the short-term kind of, merged traders overcome, the change in structural flows that I talked about, at the beginning of this question? And so if the answer is yes, then that's downward price pressure. But then the thing is like that structural change in buy pressure never goes away. So like that's a permanent change to the protocol. So a year from now, once we're past the merge and we're past all that, to some extent, like it's going to come back to fundamentals at some level. But you do have a very significant permanent change in structural flows, which is not going away, and which will like significantly dampen the sell pressure on Ethereum on a daily basis.
Yeah. Well, I mean, we've gone on a while. We didn't lose too many people. I see we still have the same amount of people on Twitter Spaces the last 15 minutes and YouTube Live the last 15 minutes. So thanks for sticking with us, everyone, talking on these tangents about Ethereum. Matt clearly understands it better than me. I'm just very skeptical of it still until I can understand it.
Well, you could be right. I mean, I might look silly in a month's time. We'll see.
Who knows? Yeah, who knows? Who knows? While we've been talking, the Nasdaq has recovered and is now positive. It was down like 1% earlier. Yeah, we did it. I mean, I love when there's like, to me, like the people coming back into the markets is like it's like a strong signal. When you see the market down and then over the course of the day it comes back up and ends the day positive, that's like a good sign. Like that means it's like you earned your positive return. The market earned it, as opposed to gapping up in the morning and opening up like 1% higher. Then it's always like, oh, is it really earning, or is it just like, what's going on here? Are people going to start selling all of a sudden? So it's like a hard fought positive performance day, which to me is bullish because we've seen a lot of these days, I feel like, recently. So let's hope
a
that
lot
the
of
soft landing
reversals
continues. Yeah.
Too. I mean, like we spoke about it earlier, like the huge reversals we saw on like Roblox and Rocket Lab of, negative after hours and then like huge rallies thereafter. Lemonade's been on quite a tear lately, and so it's been really good to see some of these growth names start to get some of the credit that we think that they deserve.
Absolutely. Cool. All right, Matt. Well, next week I will not probably be on, I don't think, but Matt, you will maybe you will be on, and we'll have more details on that soon, right?
Yeah, I think we'll have a guest host working on lining that up right now. So
Good.
You will be missed, but enjoy your time off, and it was great talking to you, Emmet. Thanks, everyone.
Sounds good. All right, thanks, guys.